All right, today we're going to pull back the curtain on how certain businesses create just exceptional value. And we'll do that by looking at a specialty chemical maker, Fineotex, to really understand the anatomy of what makes it tick as a potential compounder.
Okay, let's dive right in. Here's how we're going to break this down. First, we'll talk about the core idea of a compounding machine. Then, we'll look at how Fineotex actually creates value and what gives it a real structural advantage. From there, we'll explore where its future growth is going to come from, and finally, wrap it all up with the numbers that truly matter and the core thesis.
So let's kick things off with a core idea, a business truth really, that frames this whole analysis. This is the bedrock for how you can spot high-quality businesses.
You see, here's the thing that separates the good from the great. A true compounding machine has a high-return core business that generates way more cash than it needs just to stay running. But the critical part is what it does next. It has to be able to redeploy all that extra cash into new, equally high-return projects. That ability to self-fund its own expansion, that's the mark of a truly superior business.
All right, so that's the theory. But how does Fineotex actually do it? How does the money flow? Let's get into the mechanics of their value creation engine.
So it all started in a very specific niche, textile auxiliaries. They became one of India's biggest players in this space. Now, this wasn't just any business. It's a profitable, specialized field where they built up deep expertise and customer relationships. This became their stable, cash-generating foundation.
Okay, and this right here, this is a really critical piece of the puzzle. Their manufacturing base is fungible. What that means is they can switch production between different products pretty easily. They can pivot from their core textile chemicals to newer things like cleaning products without having to build a ton of new factories. That's the secret sauce to their capital efficiency, and it explains how they can grow so profitably.
And this, well, this lays out their playbook perfectly. First, they master a profitable niche. Then, they use the cash and the know-how from that to move into related markets. And finally, they take aim at totally new, massive verticals. It's a disciplined, step-by-step approach to expansion, and it's all funded by that core business. This is where the value really compounds.
Okay, so we know how they make money. But the real question is, can they keep doing it? Is the model durable? That brings us to their structural advantage. What makes them so tough to compete with?
So why are they so profitable? Well, the answer isn't just in the chemicals themselves. It's in how they're sold. They focus on specialized, custom-made products that solve a specific problem for a customer. This changes the entire conversation from "what's your price" to "what can your product do for me?" And that gives them significant and, more importantly, sustainable pricing power.
And just look at this. The numbers tell the story. That gap you see, that's not a fluke. Fineotex margins are consistently almost double what their peers are making. This isn't some temporary thing. It's hard, quantitative proof of a strong, competitive moat. This is what their business strength looks like in black and white.
All right, so we've established they have this high-return core engine, right? It's just spinning off cash. The next logical question is, where do they point that engine next? Let's look at the growth levers they're pulling.
And management is not shy about their ambition. This quote says it all. Their recent acquisition of a U.S. company called CrudeChem, that wasn't just a small add-on. It was a strategic move designed to completely transform the company's size and global reach.
And to understand just how big of a deal this is, look at this number. That's the size of the U.S. oil and gas chemicals market they're now playing in. This puts things into perspective, right? They're moving from their traditional ponds into a massive ocean. This is how you really expand your runway for growth. But here's the thing. They're not a one-trick pony. It's not just about oil and gas. They're also making a methodical push into water treatment. And this is a sector with some powerful forces behind it. Think stricter environmental rules and mandates for things like zero liquid discharge. This isn't growth they have to create from scratch. It's being pushed forward by powerful, long-term regulatory tailwinds.
Look, the story sounds great, right? But a good story has to be backed by hard numbers. This is where we anchor our conviction. This is the part that connects everything we've talked about.
Okay, first up, return on capital employed. At over 34%, that is just outstandingly efficient. Think about it this way. For every dollar they invest back into the business, they're generating a huge return. This is that structural advantage we've been discussing, boiled down to a single powerful number. It's a true hallmark of a high-quality business.
Next, look at their profit margins. Over 21% after tax. That's the pricing power we talked about flowing straight to the bottom line.
It's proof that their competitive advantage is real and, it's very, very profitable. And maybe the most impressive part? They've done all of this without borrowing money. Zero net debt. That's a fortress balance sheet. It gives them incredible financial strength and the flexibility to make moves when opportunities pop up.
So when you put it all together, how should we think about this company? It's really more than just a chemical maker. It's a fantastic case study in smart, long-term capital allocation.
So here's the framework. You start with this highly profitable niche leader that's basically a cash machine. Then they use that core engine to fund a major strategic transformation. They're expanding into multiple massive new areas like oil and gas and water. It's just a textbook example of disciplined capital allocation in action. This framework, it really helps you see business quality with incredible clarity, and it leaves you with a really powerful question, not just for Fineotex, but for any business built this way. When you have a high-return core engine like this, and a clear road ahead to reinvest that capital, what's the real limit to its growth? The potential to compound value? Well, it becomes truly compelling.